A report just released by Bank of America Merrill Lynch says gold may go as high as $1,500 an ounce. Those gains coming in the next 18 months. Patrick Chidley is a mining analyst at Barnard. Mellet basically agrees. He joins us now with his outlook and stock picks. Patrick, great to see you.
Yeah, great. Thanks very much for having
me on.
So
first, let's set the stage. What's driving gold prices? What do you see as the underlying fundamentals here?
There's a few fundamentals. Obviously, the weaker dollar is the main story that's really pushing it higher. And I think not just the weaker dollar, but I think there's to be expected to be weaker currencies all around the world in terms of the fiat currencies. And I think people are buying hard assets as a result of that.
So it's a store of value, risk aversion.
Yeah, ahead of some inflation, which really isn't visible at the moment. But I think there are a number of investors that are getting into the idea that inflation is on its way globally.
Talk about the time frame for inflation. When you say on its way, how will that translate into the Fed finally, here in the U.S., finally seeing higher interest rates?
Well, I think it's chicken and the egg, really. Will the U.S. raise interest rates ahead of inflation? Or they probably will. And when does that happen and at what rate? But I think people are betting that they will have to raise interest rates certainly down the road, even if it's not plainly visible at the moment.
So Merrill forecasting, as we said in our intro, $1,500 an ounce for gold over the next 18 months. What do you think? Where do you see gold prices headed? Where's the top?
We're a little bit more conservative in terms of our current forecast. We're kind of $1,000 to $1,100 for the next couple of years, looking for more of a gradual increase in gold prices over the next few years. But I would say, $1,500 is only like 36% away. This is quite a volatile metal, and I think that it could do that at some stage. We're just not predicting exactly when that's going to happen.
From an investment perspective, are there any opportunities, or have you missed the boat?
I think there are great opportunities in gold, in particular in some of the equities. The supply-demand story is also very good in gold. I think we've got a lot of difficulty in getting new supply. There are, however, some companies that are out there that have new supply coming on, and I think that's a good place to be invested.
Can you give me some examples, some names?
Yeah, one name that we like is Randgold Resources. It's a up-and-coming, what we call a mid-tier company, and we think that it's got a good potential to increase its gold production from 400,000 ounces currently, and by tripling it, perhaps up to 1,300,000 ounces.
And we just showed viewers Newmont Mining, ticker NEM, 23% up year to date. More room to grow here.
Yeah, Newmont's a good, steady one. I think it's undervalued in the market. It's really for a different reason that we like the stock. We think it's going to, at these kind of gold prices, it's got quite good margins and should kick out very strong cash flow.
And another one I think you brought along, Randgold Resources, ticker appropriately enough, GOLD. This one's up 80+% year to date. That's a high flyer.
Yeah, that's the one I just sort of touched on there, but just a little bit more. It's a high flyer because it's got some of the highest quality deposits in the world. And it's going to be bringing on new production over the next sort of 4 years or so. And we see big increases in free cash flow at that company. We also think it's very well managed as well.
Is it better to go with the individual names or perhaps an ETF?
Well, I think the ETF is good if you haven't got time to really pick and choose, but the ETF will have names in there that maybe not going to do so well. And so it's, we'd advise people to really invest on the basis of really where they're comfortable investing. And I think that there will be names that really outperform in the sector, and there will be names that really don't do much. And there are some names that to be a bit careful of in the short term. I'd say some of the South African gold producers have been suffering from very high costs and rising costs because of higher labor costs, higher electricity costs, and also the strength of the South African rand, which of course their costs are denominated in rands, and the strength has offset some of the benefits of the high US dollar gold price that we see.
Strategy on investing in gold with Patrick Chidley. Thank you so much for coming in today. Appreciate your time.
Cheers.